Hey everybody, Preston Brent here with our weekly roundup brought to you by our trader user group. This is for the trading week ending April 21st, 2017. Well, it's buyers versus sellers, and in this market, who holds all the cards, or most of the cards, or maybe the ace in the sleeve? What you're looking at here is the S&P 500 E-mini futures, and the first thing I want to do is just kind of take everything off the screen here for a second and just kind of lighten it up a little bit so that I can make a couple of points here. So let me just come over here and just take all this off the screen. And I've left key Fibonacci's on the screen, which I'll show you in a second. But if you look here, you'll see that over on the left-hand side of the screen over here, right in this area here, I've got volume. And this volume basically represents where the buyers and the sellers are having a big fight, all right? And in this area over here is volume over price. So you can see right at that area there, which is maximum volume, and then right in this area here, maximum volume, and then it peaks right here, but it kind of runs from this area all the way down to here. And if I were to extend it out, let's just kind of extend it out like that so that you can kind of see where we're sitting here. A little bit wider right there. You can see this is where all the buying and selling have been duking it out, going all the way back to post-Donald Trump election. And obviously at these peaks here, it's kind of a control point where most of the volume is taking place. And you can see this is where price action tends to find itself stuck, right? And it stays here for a while until one of them wins. Either the buyers win and drives the price higher, or sellers win and it pushes prices lower. Well, obviously since the Trump election, buying has been winning, but not without a lot of fights. So we had that first primary battle here, then a battle here for a bit, and then now we're into the third battle. Each battle the buyers have won. I've seen a lot of reports where a lot of analysts believe the upside from here through the end of the year will take us up around 3 to 5% from current prices. So that takes us up to a little bit over 2450, just slightly under 2500, okay, from the current price. And I'm not sure if that's true or not, but I do believe that unlike prior years where the Federal Reserve has kind of driven the markets with stimulus, do they stimulate, do they not stimulate, or do they overstimulate? Now it's all fiscal policy. Janet Yellen's finally getting her wish when she used to say for the past 6 years, fiscal policy needs to step in, meaning politicians need to step in and do something. Well, now we've got the potential Trump promised agenda of lower regulation, lower taxes, health care, which will take taxes off, tax burden off over the next decade, repatriation of funds from Europe back to the U.S. All of these things have a stimulative effect, and that doesn't even include the infrastructure build out that Trump wants as well. So the markets, as you can see, at each step of the way, we've paused a little bit, but the buyers have come in and taken over. Now we've run out of juice. And the only juice left to squeeze is, will the Republicans be able to get something done or not? Okay, I mean, you can clearly see the pause as we've moved up higher and higher. Now, technically, technical patterns, this is a bullish pattern because one way for a market to correct as it moves higher is to come up, have a pullback, and then move higher, and then pull back, and then move higher. Another way for a market to correct is as it moves up, then it kind of comes into a sideways pattern, a little chop, then it moves up to a next level, then it kind of moves into a sideways pattern, and it kind of does one of these things. This is kind of the pattern that we've had now because there's really never been that dip like this because money has just been coming in an overstimulated fashion on the belief that Trump is going to do what he's going to do, okay, and the fiscal policies will come into play. Much like we had the monetary policies for the past 5 years or 7 or 8 years. So in looking at this, my personal view is that we're going to be in more of a sideways pattern. I've told our members in our group that this is a buy the dip kind of moment. So the dip, you know, and I started talking about this actually right in this area over here, and then we came up and then we just started this slow dip. It's a very slow, orderly move down, right? And we've gotten this symmetrical triangle that I've drawn here on the screen, right? So if I take all of this off again, and then if I just put these control points with the max volume, right, just like that, right, at these price levels, and we'll put that one right down here like that. These are the major support points. We're at one right now, and to get any lift to take us up over 21 or 2401, which is the all-time highs in the ES, we need a news event to make that happen. And the news event right now is earnings. And so far, through Friday's close, we've had 95 companies come out, and about 75.8%, just slightly under 76%. Have beaten their top line numbers, and about 62% have beaten their bottom line numbers. So that's well above Q4 averages. So the earnings are getting better. Companies are willing to spend a little bit more. But I think companies want to see less regulation. They want to see more stimulative effect from the fiscal policies that Trump's talking about, lower tax rates, corporate tax rates, and things like that. And I think you'll see a move, and we'll break through and probably move up to the 2450, 2475 area, you know, in a relatively short period of time. However, if none of this stuff comes through, or we just have arguments within the Republican Party, because the Democrats probably won't step up to the bar and help them out, they'll let them cut their own throats. So it's going to really be interesting to see how this shakes out. So that's why I've been telling our members we're in a buy on the dip. Now, we've defined a dip as anywhere from 0 to 9.9%. A 10% move down is official correction, and then all the way down to 20%, and anything greater than 20% is official bear market. I don't think we're going to go in a bear market, and I don't think we're going to go into a correction. I've told our members, and I expect anywhere from 3 to a 7% pullback. We're not even there yet. This week we've finished up. All indexes, the Dow, S&P, Nasdaq, and Russell, all moved higher here in the U.S. But the interesting thing I saw an interesting note from one of the analysts that said that just 10 stocks since and this was through about a week ago, okay, just 10 stocks have accounted for about 50% of the S&P's gain this year, okay, just 10 stocks. So that's very thin breath. Now, that's happened many times in the past, but we've got to be very wary here, okay? And we've got to be very careful. We've got a lot of geopolitical events coming up this week. We've got possible government shutdown at the end of this week on Friday. We've also got this Friday the first look at U.S. GDP for Q1. A lot of people think it's going to come in below 1%. So we're going to get that first look at U.S. GDP. And this weekend, tomorrow, Sunday, throughout the day, in France, they're holding their first round of elections. And if Le Pen comes in against Macron, then that is what the markets expect. We're going to see choppiness in the euro and the British pound and the dollar. But there's some great trading opportunities in that vote that we're going to be looking at, because the final vote is going to be on May 7th. That's going to be a week from tomorrow. Or actually, yeah, it's going to be a week from next a couple of Sundays from now, I guess. So it's going to be real interesting to see how these elections play out. Now, I put these key levels here on the screen because you can also see they match up very nicely with Fibonacci. Amazing how that happens, right? Every one of these they're key fib levels. We're right at a key fib level now, which is a 1.16 extension off a prior major pivot high and pivot low in the S&P 500. We're also the next big support level down, which I call our first level of major support, is going to be around 2263. Now, there's a minor support here at a fib level, which is around 2300. All right, but you can see these major fib levels, and then there's another one down here which matches a prior pivot high, the 2136 made a year or so ago. And that's also no surprise where all the buying and sellers are having the biggest battles here to move price action above those levels or moving below the levels. So we've got some major support beneath us, and it's going to take a whole lot of shouting and shaking and some really good earnings, possibly better GDP, and some movement on the fiscal policy front to get the markets much higher than this. Other than that, we're just in this slow sideways drift to slightly lower. And if I put all of my other indicators back on the screen, you'll see where we've got and where I'm looking at this. If I take it to our 2-hour chart here, you'll see how we finally punched through, but we did not hold. You can see that upsloping trend line, which makes up the bottom part of our symmetrical triangle. We've hit it perfectly. We finally broke out here. We came back and we tested it for a good part of a day, and then we came right back below it again on Friday and closed down, right? And it is one of those kind of patterns that, again, on this 2-hour chart, I thought it was going to be broken, and it really wasn't. But if we look at it, you can see I ran this like this, and I ran that like that. And then if I extend these out, that is a rising wedge. And the probability, technical patterns in this rising wedge suggest a break to the downside. Okay, that's, you have higher highs, higher lows, but you just kind of run right in here and you finally give it up, and then away you go. We did have that breakout, as I said, but we quickly found ourselves back into that side again. Okay, so I still say the markets are still in a dip mode. We're not ready to pick up any new longs. We're going to get a good reading on U.S. GDP for Q1. We're going to get a better reading on corporate because we got a lot of earnings coming out this week. And then, of course, the French election. So we'll clear up a lot of this nonsense this week. Now, if we look at Nasdaq, which is the strongest index, we'll look at Nasdaq 100 futures. And just take a look at where it is. Hadn't made new highs, but it's the strongest, as you can see, but we're setting up for some divergences here, which would suggest that we could move lower, maybe another final push, take out 2017 highs and move lower. And the other one is the Russell, which just came back above the 2017 open price. If I get to adjust my screen a little bit here, you can see the 2017 open price, and it is no surprise, again, that if we look at the buying versus selling, I mean, it's just almost uncanny right here. This is the volume of buyers versus sellers across the price levels here. Where has the biggest volume taken place? And you can see right here, it's almost right on the opening price for the year. And you can see how we've just kind of gone up and over, above, and beyond, and below, and above, and below the opening price of the year, going all the way back to the beginning of March, right? We started this process here. So again, we're still in that down mode. We still got that kind of symmetrical triangle going on in the Russell. The odds favor a break to the upside of a symmetrical triangle. Generally, if you approach it from the lower left up, meaning we're in a bullish market, but we've kind of come into this sideways. So this really is a little bit more of a 50-50 call where we break down or up. Okay, you can see the 2017 high, 2017 low of the Russell, and it's really a tight range given all the craziness that we've had. But the Russell's been the weakest because we just moved back up of the 2017 open price this week. And then, of course, if we look at the Dow futures here, again, same pattern going on. We're sitting almost, let me just increase the size here so you guys with bad eyesight can see this. We just moved back up above the 50 EMA, right? But we're trying to get back into this pattern here, and you can see the upslope and trend line. We're just having the dickens of a time doing this. So we're still in this dip mode, of an orderly one, but still a dip mode. If we come and take a look at bonds, because I'm looking, well, before we go into bonds, let me just look at volatility real quick. We're in the upper level of what I call the green zone of volatility. That means you really, the volatility is still relatively low in my mind. Okay, historically. Granted, we've had to move up from the lows that we had just as early April. I mean, just early April, the VIX was down around 1080. We're at 1463 now. And the VIX has been moving up most of April. Since April the 5th, VIX has moved up. And as you can see here, we had a peak on the 17th and pulled back. But that just, if we shrink it down a little bit, you can see in these colored zones, and again, different option strategies and different trade strategies depending on which zone that we find ourselves from the VIX. And we held this green zone, meaning below 15, for quite some time. In fact, we went right into the green right after the Trump election. Leading up to the Trump election, you can see the vol went up to around 23. And as soon as it looks like Trump was going to win and then he won, vol immediately came back down on all the potential good things his fiscal policies would do. But the markets have patience for only so long. And now it's starting to get a little bit choppy, and we're starting to get back into the yellow zone again. For volatility. So we've got to watch this very carefully. Once you get up at this level, it will not take much to drive vol up over 20. I mean, and when it starts moving, it'll move really quick in 3 or 4 days and you're there. So we're going to keep a close eye on that. And if we look at the volatility of volatility, which kind of gives you a little bit of an early warning clue as to what volatility itself was going to do. You can see it was up at about 115, and then it's completely come back again. And this kind of leads volatility a little bit, right? This shows people buying vol. They're buying things, driving volatility up. And a lot of times you'll see that start to happen before the markets move. And then when the markets move, people sell this stuff, and they sell their puts, and it goes off. So it's a little bit of a leading indicator, actually. And when you see it get up at elevated levels, and if we just take it back a little bit, you can see here, we're still at a very low level compared to where it's been, right? I mean, this shaded zone here represents levels where markets have just gone batshit crazy. Right, but we're still at a very low level here. You know, I look at it like once we get over 110 area, then we got to be very careful. 100 to 110 is kind of a zone, kind of like a zone that says, okay, be ready for a vol pop or something like that. But we backed off just a little bit in volatility on volatility. And then, of course, if we come over here and look at bonds, because it's a good risk-off indicator. You can see bonds have actually moved up and made new 2017 highs. Let me just increase this up here so you guys can see the movement. You can see here I was calling for a low in bonds of around 145, and it almost got there. It got down to 145.26. I missed it by just a little bit. And then boom, off we went to the races. And we're back up here again. I do believe bonds is going to find itself back around this area of control where you got all this volume right in this area here, which would put us around the 150 level. I can see that happening, and that's not to say we're not going to have spikes up here, but there's going to be a time when equities are falling and bonds are falling at the same time. I know sometimes that can confuse people, but that's when people are just going into cash. So if we get a really bad existential event, I just don't see bonds going much higher because they're going to be raising rates. And if they're not going to raise rates, they're going to be taking money off the U.S. balance sheet, and that's another form of raising rates. I've gone through that in more detail with our members on how that works. But this is a little bit about where I see here, and I'm more interested in neutral to slightly short bond market at this time. And then, of course, currencies. This is where all the fun's going to be. If we look at the euro, it's flat to slightly up. But you can see here we've been in this range here. Depending on who wins the French election is what's going to take the euro above this shaded zone up here or below this shaded zone down here. If Le Pen wins, the euro is going to come down here and take out the 2016 lows. My original target for the euro was back timing-wise towards the summer or later this year, down in the almost parity, almost $1 right here. Okay, now if Macron wins, then the euro is going to clear this shaded zone, probably come up to 110 to 112 area, probably maybe even approach this area up here around 112.5, where we've got another area of potential overhead buyer seller, which is where we had our last big fight. So I'm sure that's where it'll take place again. You can see the area of control here with the volume right in that area there. Okay, So around 1.1062, 1065 area. I don't think we're going to get much higher than the 2017 open, but let's just see how this works out. But I tell you, I'm waiting for the French election. The other one that's going to be really interesting to me is the British pound. Theresa May called a snap election, which, believe it or not, is going to benefit her. You can see on the British pound how we made new 2017 highs, and we're up at 128 now. I am long-term bullish the British pound. I think that snap election, and you can see the big movement here, that was because of the snap election. And why would you say that? The election was not about to say, do we change our vote? The election was for her to solidify and get more votes for her to do what she needs to do to get out of the European Union. And once she starts negotiating her trade deals, I firmly believe the British pound is going to be back. I believe the British pound is going to be back at the 135 area pretty quick. That's kind of how I'm seeing this right now. So let's just watch what happens. But a British pound longer term, I'm more bullish than I am bearish on that. Although it will be choppy until we get more clarity around the trading partner negotiation deals. If we look at gold, gold right now, clearly, I had said back here that gold is going to be moving higher, and I'm also on record saying gold's going to finish the year higher than where it started. It should be an area to be bullish. You can see here my target, near-term target for gold is around 1307. Then I think we're going to run into some issues here. It may pull back a little bit. It may hold up a little bit. But you can see we already had the first sign of the bullishness with the 5200 cross this week. We've got a huge little resistance area there that I think we're going to come up and touch. And then we're going to chop around a little bit. I think we're going to be in a range like this, probably from around 1350 down to about 1232 for a little bit of time until we decide, do we break out on the upside up here, or do we break out on the downside? I think the gold is going to be more chopped this year, but I do believe it's going to be heading higher more than heading lower. So I'm neutral to slightly bullish in gold. Energy, now I'm just the opposite of Goldman Sachs. Whenever Goldman Sachs comes out and says, hey, I think gold is going up, I think oil is going to go up, I'll take the opposite stance. If you guys recall early this week, Goldman came out and said, we think gold's going to go to the Brent is going to go to the mid-60s, and then WTI West Texas is going to stay in the low 60s. I said there's no way. I just don't see that. I see the upside for gold being around in the mid-50s, the downside being low to mid-40s. And look at what happened this week. That was after they came out and said gold's going to finish higher. This was also after OPEC came out and said we may extend our production cuts. The markets don't believe them. And even if they do believe them, they just believe that there's just an abundance of supply. And you can see where gold or oil is sitting right now. Okay, it is clearly coming in this down mode. Now I think it's going to arrest some of this near-term dramatic move lower and end up in a chop range. But we've been trading gold in a chop range now all year long, since Q4 of last year. And we've done fairly well with it. So we're going to stick with our strategy in oil. I don't see it veering from that very much. We're in ags. We haven't done anything in ags. I'm looking at that. We've done 5 trades in soybeans that have been successful. We're looking at a couple of things in ags. We haven't been in meats this year. Last year we played live cattle successfully, and feeder cattle as well. We haven't been in hogs this past year. We took a great trade in hogs a couple of years ago, but there's no setup that I like right now. Same thing in softs. So that's a little bit about the markets, folks. There's a number of potential new trades that we're looking at, I'm looking at for our members. And there's a couple of things that we're looking at doing. So, and we just put on some new trades in our secret trader that I had posted to our members. So for those of you that are not participating with us, if you want to check us out, I've got a couple of offers with this email. You might want to check us out. We got a lot of folks coming in. We seem to be growing a pretty good international audience as well. So come on and check us out. Otherwise, everybody have a great weekend. Members, I will see you Sunday night in our weekly market watch. Have a great weekend, everybody. Take care. Ciao.